Hi, Natasha. Hi, Gottfried. So excited to speak with the two authors of the amazing book that was launched earlier this month. Title of the book is The Payoff, How Changing the Way We Pay Changes Everything. This is a book everyone in our industry should read, but actually it's also a great giveaway for the holiday read for friends and family who will finally understand why you are so excited about payments. What inspired you to write the book, The Payoff, How Changing the Way We Pay Changes Everything?
So I can start since I started writing it. I think it was sheer enthusiasm for the subject. I've been in payments for most of my working life in various capacities, as a consultant, as an industry executive, as a researcher during my PhD. So it's sheer enthusiasm for the topic. I've always been fascinated by it. So already before COVID, I started writing the book. And then COVID gave me the perfect excuse to keep writing when we had the first lockdown. And when I had finished sort of the first version of it, I shared it with Natasha, who I know since she was with me at Swift and always critical of what I did. So she's a good person to show it to. And she said, well, true to her nature, she said, yeah, okay, but the topic is great, but why don't we write a really interesting book about payments? I said, okay, well, thank you. And then we sort of reworked it to address, rather than how it works, much more how it is relevant for people, how it impacts our daily lives, why you should worry about it, and all these things, the politics of it, etc. And that's, I think, the result of what we have right now. So maybe, Natasha, you want to chip in on this?
I mean, that is the history. But I think when we were at Swift, Gottfried kept on mentioning this idea of a book, and it was much more of a professional's book that he was sort of thinking of. And I suppose that sort of got me thinking of, I think you need a much more general book, because this is, one, it's fascinating, and two, it's really important. So I'm glad that he came around for possibly the first time ever to my way of thinking.
No, but I do like the perspective, Natasha. And also I hope for that reason it's a good read for basically everyone, also outside our industry. Because the payment system is very complex, and new developments as CBDC only add to this complexity. So what are the questions we never thought to ask to assess these initiatives, or that we basically should ask to assess any of these initiatives?
I mean, I'd just come back, sort of building on the last question and just bring it on to this one, because I don't know the questions we never thought to ask. But one of the other things is, I think in many parts of finance, and payments is no exception, you have silos of expertise and silos of interest. So there's a lot of people that may be very expert on standards or credit cards or retail banking. It doesn't matter, but they tend not to look over the wall, or not be able to see over the wall, because they're so engrossed in what they're doing. And I think one of the problems when you're thinking about new things is that everyone's thinking from their own standpoint, from their own area of expertise. And of course, if you have 10, 20, 30 years of expertise in one particular area, you want it to survive. And I think we can't ignore those sort of entrenched, quite entirely justified interests that people have, because their careers depend on the survival of whatever it is that they're doing. So I'll pass over to Gottfried to actually answer the question you've asked.
Well, one question you should ask, and it's perhaps less for the general public, but more for the people who will have to work with the stuff, is who's going to provide, or how do you provide liquidity in cryptocurrencies? And that's something that a lot of people don't think about. But at the end of the day, one of the big roles that banks do in the current system is you drop your banknotes at the bank, and then banks create credit around that, etc. But they also provide, so to speak, liquidity. They allow you to spend stuff, to bridge gaps in your spending pattern and all of that. And especially if you get to larger amounts, that becomes quite a big function. And in wholesale markets, liquidity provision is the whole name of the game. Central banks typically don't do that. They just provide you balances. It's commercial banks that have provided this facility. In the world of crypto, it is done by adhere to highly unregulated exchanges. And we see the consequences of that is one of those exchanges is excluded, as we've now seen with Binance in the UK. And all of a sudden you find that people can't access their accounts anymore. And the liquidity that Binance provide evaporates, so to speak. So I think that's one of the pertinent questions to ask. How is this going to work in practice? Because to pre-finance every smart contract, to lock up your Bitcoin in every transaction is quite an expensive way of doing it. It's like having to pay everything with cash notes without having the services of banks behind it. And I think that's one of the questions that should be asked. How is this going to work in a world of crypto? And if banks are not going to do it, fine. If others are going to do it, how are we going to then manage the risks that are inherent in that, which banks have always been carrying and subject to the oversight that comes with it? But how's that going to work in the new world? So it's one of the questions.
Okay, thanks. Well, if you look into Europe, Europe does not really have a role to play in the cloud. We lack a strong European payment scheme. How could we look at this? Will payments become balkanized to geopolitical spheres? What is your take on this?
Well, first, I think payments, are they balkanized? They do tend to differ by geography. And we mentioned several big blocks in the book. I mean, the United States and the Anglo-Saxon countries tend to be card-driven. Europe tends to be transfer-driven. China has gone a completely different road with Alipay and WeChat. And it's one of the big discoveries for me, at least when I was doing research for the book, how big that has become. I mean, the Chinese alone among themselves do more electronic transactions than the rest of the world combined. Yeah. Alipay and WeChat now do over 700 billion transactions per year. That is way more than there are Visa and MasterCard transactions in the entire world. So it's become a very, very big ecosystem, very particular to how China does it with these dedicated wallets. Then there's India, which is going the way a little bit of Europe with transfers through the banking system, but facilitated by APIs for fintechs, etc. In India, it's called UPI. In Europe, it's called PSD2. So they're sort of comparable models, but they're going a different way. So you're seeing big systems by blocks. So that's part of the balkanization. A lot of that's for historical reasons, but because payment systems are subject to network effects, these historical differences tend to perpetuate themselves because you build on what's already there. And then even within Europe, you see huge differences. I mean, take Holland and Germany, right? Holland is considering a world without cash. In Germany, cash is still used for 2/3 of every transaction in stores. I mean, the Germans, the Swiss, and the Austrians are hugely dependent on cash. And right next door, Holland has gone a completely different way. We're contemplating a world without it. So you see these differences. Some of it, I think geopolitics will reinforce it, but I don't think it's the sole cause of these differences. For a lot of reasons, they tend to be cultural, historical, and because of the nature of payments, tend to be sticky.
Mm-hmm. If you would consider payments sort of a utility in a way, something basically linked to infrastructure, how important would you think is it for Europe to own that infrastructure themselves, or rather see whether it's Chinese or big tech companies coming into Europe to basically play a big role there? What is the importance of owning that infrastructure?
Oof. I think it is important, and that's maybe because I don't think we should be naive about how it works. I mean, China and the US both have a peek at data that they have, and then Huawei is a good case in point, right? So I think we should be careful to be too dependent on it, because there's data access, there's the ability to shut you off if you don't do what the other party likes. There's all sorts of things, and I think the Chinese have realized early on that they want their own infrastructure and networks. I think in Europe we've been more relaxed about it, but I do think it is the end of the world. There is such a thing as power in this world, and it all works fine if we are each other's friends, but that may not last forever. So I think it's important to have our own infrastructures. Yes,
both the infrastructure plus the sort of the cloud that comes with it.
Yeah. Natasha, I don't know. I mean, I'm
Yeah, no. Well, I mean, I'm speaking from a small island nation here, which doesn't have quite the same as the bloc, And when we think about the intersection of this with the last question, if you're the UK, if you're Canada, Australia, Singapore, maybe not Hong Kong anymore, what are you going to do? Are you going to entirely own your own infrastructure in the same way that the Euro bloc might do? No, but I think to the point of the last question, I think payments have always been balkanized. What we're now seeing is geopolitical blocs. And the question for, I guess, those other sovereign nations who would also like to, particularly the island that I'm sitting on, likes to think of itself in the geopolitical sphere. I think you have to work out where you're going to align to, or go through the expense of owning your own infrastructure. And probably it's more a question of alignment. And the alignment will be geopolitical, but also more about how you conceive of things like data privacy and so on and so forth. So it'd be quite interesting to see where some countries throw their dice.
Yeah, absolutely. And that also basically brings us to the next question, which is one of the European initiatives is the European Payment Initiative. So it's a recent initiative driven also by the European Central Bank and the European Commission. And I would like to know, what is your perspective on this? And will it be different than other initiatives we've seen in the past? Maybe also because there is, it's a different era with these geopolitical blocks. So what is your take on that?
I think that should be answered from a continental representative.
Oh, thank you. So it depends on where it's going to go. First of all, I mean, EPI is trying to fill a gap that Europe passed upon 10, 20 years ago when they sold their infrastructures. I mean, they had Eurocard and they had Visa International, which was owned by the European banks, and they sold it back to the Americans, so to speak. So I think we're now having second thoughts about that, perhaps. But historically it was different, and then we gave up on it. Trying to get back, I think, is not going to be easy. I think if EPI is going to be another card infrastructure, I think that's going to be very hard, because that problem is solved, and you'll find parties, when they have to choose between some things that's there and that works and something that's new, I think it will be difficult to get them to switch. If EPI were to go, I think there's an opportunity now that everything's moving online. So if EPI were to come with really good online solutions, online wallets, and all of that in Europe, I think there still is an opportunity, because that field is still evolving. If they were going to come with a good alternative to the Apple Pay wallets, the Amazon wallets, etc., and PayPal perhaps, then I could see it going somewhere. But they would have to focus, I think, on areas that are developing rather than areas that are already established, like the physical point of sale. And if there's any lesson from payments, I mean, what we learned from China, for example, is when there's relatively little infrastructure, you can change a lot. There's a whole lot of new development possible, etc. When things are already embedded, it's much harder to change. You can only change things if you build on what's already there, but people aren't going to switch if it already works. So I think we'll have to take the opportunity of the move to online to come up with something creative and new, rather than focus on the world that's already well served.
Yeah, and then obviously for both sides, for both the consumers and the merchants.
Yeah.
Okay, well, talking about big tech, what impact will big tech continue to have on the payment sector, and how pivotal will DM be, for instance, the Facebook initiative?
I might start with that one. I think DM has been enormously pivotal already, as Leibbrandt has first announced, in really kind of galvanizing things certainly at the policymaker level, and the central banks have been moving really, really fast. And what they'll do in the end regarding CBDCs, we'll see. But I think it's moved things on tremendously. Just that sort of one paper that came out, whenever it was, 2 years ago, 3 years ago. How pivotal will big tech be in the EU? I don't see big tech in the EU dominating payments, but it might be pivotal in driving other things. And I don't think EPI might not have been driven in the first instance by big tech. It might have been driven more by geopolitical considerations, by the interests of the Euro bloc, by the Master and MasterCard and Visa. But big tech will also be part of that thought process, I think. Gottfried.
No, I would agree. I think the role of big tech is already big. I mean, we can look at Apple Pay, right? Apple Pay and especially their payment in the App Store, where they take a 30% cut of all the in-app purchases. That's now becoming a big source of revenue for Apple. It's 10% of their revenue. So arguably, they're a big player in payments already. And yes, I do think that will have an influence on Europe as well. I mean, to get a bit back to the previous discussion on would you want your own infrastructure, you could have these strange things that businesses that are perfectly legal in Europe are excluded because they don't comply with American norms. Like we're from Holland, right? So we have lots of businesses in Amsterdam that are considered illegal or undesirable by American standards, and they could find themselves excluded because of these American infrastructures. So I do think that we should worry about that, and I do think that big tech is playing a role in payments already. Amazon Pay is another good one. They're developing their own wallet, and who knows where that goes. So yeah.
And I think maybe just going back to sort of eBay and Amazon, and they've completely changed our buying habits, our purchasing habits already, and our willingness to purchase from abroad, although Brexit's been a bit of a setback to that for those of us buying or selling to the UK. But I think without Amazon and eBay driving our acceptance and our confidence in online, we wouldn't be doing nearly as much online active purchase at the retail level. We wouldn't be doing nearly as much as we are today. Whether that's good or bad is another question, but it's completely changed things, I think, those two.
It did have, and it sure will be. And indeed, it's interesting to see. We are all expecting a big announcement from DM, but we're still waiting for it. But your book will be launched or is launched, so you can't. Maybe it will be for a follow-up book on this matter. Digital coins, they have surfaced in the past decades, and most recently, central banks also engage in this topic. How will CBDC or the central bank digital currency affect our payments future?
We completely disagree on this. Well, there's an email going backwards and forwards between the two of us.
Okay, give us some insights in where you disagree.
Gottfried, you start.
Oh, wow. Well, first, I think there's lots of uncertainty about how it will be implemented. A lot will be dependent on where they're going to go with it. Is it going to be a retail solution like the one they're rolling out in China right now, where consumers get wallets with essentially electronic banknotes in them that they can spend, or will it go wholesale by essentially opening up central bank currency or central bank deposits to a larger group of players, such as asset managers and brokers and people that trade in the wholesale world, and that would be a little bit like the utility tokens that have been experimented with by some banks. So there are already two flavors in retail and wholesale that I think could play out differently. A lot will depend also on, is it going to be interest bearing or interest charging? Are they going to go that road? Will it be truly anonymous or not? What are the restrictions on foreigners holding it? Will there be controls in place or not? Because if they really were to implement it without any restrictions, then it could have far-reaching consequences, and it could many of them unintended. You could be facilitating financial crime on a giant scale. You could see deposits leak away from banks to the central bank, and the banking system facing a funding shortage, and then who would extend credit? So I think there are quite some big consequences that depend on how it's being implemented. And a lot of the discussion that now going on in central banks and the papers they're putting out is around these questions. How are we going to get to grips with that? How are we going to get the right balance between allowing new uses without opening up the world to these unintended consequences?
Yeah, and how do you see that, Natasha? Where do you sort of tend to disagree? and maybe also, what problem does it solve? This whole CBDC. Why do we need it?
Well, I think one of the interesting things with CBDC is which was and I guess DM kind of precipitated the thinking around some of these things, is that the central banks, you can see them looking individually at what problems it is they want to solve, And what I think is quite interesting at the moment is they're putting out a lot of these papers and having a lot of discussions, and these are really important societal questions, massively important, related to privacy and who we want providing finance and who we want to see what. Do we want anonymity? Do we not want that? Well, every jurisdiction is going to answer those questions differently. And I don't see an awful lot of discussion outside the universe of the BIS and the Bank of England papers and the Banque de France papers. I can see it there. I can see it in specialist publications like your own, but I'm not seeing it in the general press and on general television. But these should be questions, and much like the book, we think these should be things that people think about. So I think we could go in very different directions, and each country will decide what it is it needs to solve, and a central bank might decide it's something, and the public at large and the government might decide otherwise. And so that will be interesting, and presumably the central banks will do it in concert with their countries. But it will really throw these questions into fast relief. But I think if there's nothing to cure for, presumably a central bank would not go ahead with doing one.
I think one of the very interesting things to watch right now will again be China, where they have rolled out a fairly large experiment in Shenzhen by giving lots of citizens a wallet preloaded with central e-yuan, so to speak. And the key question is, will they embrace it? And they may very well say, guys, Alipay and WeChat are fantastic. It works like a charm. Why on earth would we bother with this extra thing, which may not have the liquidity, may not be accepted everywhere? And so far, the signs point that the Chinese government has to throw in some pretty big incentives to get people to use it, like preloading it with free balances and all of that, which means it's not taking off like wildfire. And yeah, we'll see on that. It might very well be that, to your point, it doesn't solve any problem, and the current e-money is as good as what would come with CBDCs, and then you will see lower.
I think with the certainly with the sort of disappearance of the physical manifestation of cash, there are questions to be asked, and the emergence of stable coins and possibly proliferation of stable coins and private forms of money. I think you have to ask as a central bank, how is it that I play my anchoring role? How is it that the anchoring role of the physical currency is still there in people's minds, not in our minds, but in the minds of people who are now 5 or 10 or 15 and who don't work in payments. And I think that's very important. And I don't know that it necessarily requires a central CBDC, but it might, if the conclusion is that it does in some cases, I could see that being a valid reason alone. What that CBDC looks like and whether we actually, have a CBDC wallet on our phones and so forth.
Yeah,
that's not necessarily the case.
And how it will be kept, or whether there will be interest, or who knows. Well, while we are discussing, because currently stakeholders in the current payments ecosystem are arguing about regulation, about open data economies. And while we're doing that, an entire new financial infrastructure is built or is being developed on Web 3.0, where decentralized finance is a promising manifestation. At least a lot of people say so. But how should the incumbent players industry look at this? Is this truly disruptive? Will it be? And will code reduce the amount of regulators? Will financial markets infrastructures become redefined in the coming 20 years, and also by this basically DeFi or decentralized finance?
Yeah, that takes us a bit away from payments, right? Decentralized finance is about much more than payments. It's about peer-to-peer lending, tokenized assets, and all these things. It's interesting. A lot of it so far is regulatory arbitrage, right? It is trying to do things that you could perfectly well do in the physical world, but you don't want to do because of scrutiny and because people are looking at it, or because it's not allowed. So there is some of that. Now, that's not to say that in this very complicated geopolitical world, there may be a role for this. Like there's a role for tax paradises in a fragmented world. There may be a role for DeFi as a regulatory paradise, so to speak. But again, it comes back to, you need to ask some questions that it may do away with. It may be regulatory arbitrage. People are also seeing it as a way of doing away with banks as intermediaries. that may very well be true, but they do need to realize the functions that banks now provide may go further than many people realize. Comes back to the point I made about liquidity. It is one thing to have everything locked up in smart contracts, but if all your Bitcoin are blocked because they may be used in a future transaction, you can't use them. That's a pretty expensive way of managing your money. Who's going to make a market in that? Who's going to say, I'll provide you the Bitcoin in the meantime, using that locked up Bitcoin as collateral, manage the risk and all of that. And then it comes back to managing financial risks, which is exactly what we have banks for, who are regulated. And when other parties start to do that who aren't regulated, you should wonder about, is that what we want as a society? Because we put the regulations on banks for a reason.
Yeah.
I think it probably changes the way that the regulators need to approach things, whether DeFi takes off in a big way or not. And you can already see things that are not allowed or come with safeguards in the regulated world can happen in the decentralized world without a problem. And the regulators simply don't have purview. So that they have to start thinking, and the legislators have to start thinking about things differently. And just to take an example, you can't, there are conditions if you go to a bank for taking out a loan or expanding your overdraft, and they have to take into consideration your income and ability to repay. But you go on Reddit and you can borrow in Bitcoin, giving yourself with no kind of credit history, no questions about ability to pay, much less your downside exposure on the currency front. So I think from that standpoint, it requires a rethink of how we regulate things.
Yeah.
But
it doesn't do away with regulators, I don't think at all.
I'll give one example. I had a discussion recently about give me a good example of a smart contract that would work. Well, they say what you could have is these loans that you get a loan indeed in Bitcoin, and you can collateralize it with other cryptos, right? You put up a margin in, say, Ethereum, and the contract will be self-executing. If you don't pay back, we'll just liquidate your collateral. We'll put a haircut on there for 50%. That's all very well, but that only works if in the moment when you can't pay it back, there's a market in that collateral. And one of the things regulators have learned is that when people get into trouble, everybody gets into trouble, and there may not be a market in that collateral, and they freeze up. So these smart contracts may be very smart, but if they don't take into account the reality of markets and risk, they may not be so smart at the end of the day. And I do think there's a bit of naive thinking going up that these things will sort all sorts of problems that we have learned to solve in a different way, together with all the pitfalls that come with it. And a lot of the technologists tend to overlook the financial risk side of things. Let's put it that way. Well, consumer protection, but also what central banks do, systemic protection, right? Yeah. Because you could have huge systemic risks if all these players in crypto depend on each other. If all these exchanges are linked to each other, you could have the same, what we saw in the banking world, you could very well see in the crypto world as well. And then who's going to step in?
Okay, well, we're at the end of the interview. Thank you so much for your perspectives. Can't wait to read the book. Thank you so much.